Hello everybody, this is Kunj Bansal from Sarthi Group. I am recording this message on 19th March in the morning. We all have been seeing how the markets globally as well as in India have been falling. So while we have been continuing to discuss the stock ideas in market, but lots of you have been asking more and more questions as to what is happening in the market, what should be the strategy, what is the way forward. Let me try to answer these questions to the best of my understanding. Not that I know everything despite having been in the market for so long. So to start with, nobody is asking why the market is falling because all of us know it's because of the corona impact that market has been falling. But yes, what we all are trying to look for an answer to the question and what everybody is asking is that why so much fall? In my view, the reason that why so much fall is that the impact of the slowdown which will get induced by the corona is probably not getting quantified. So while the primary impacts are visible in terms of clear slowdown or the demand not being there in airlines, in travel, in holiday, in consumption, and so many other things, the secondary and tertiary impact of these events, which will happen over a period of time over the next few quarters, I don't know if it can extend up to a year or so also, is not getting quantified. And that is where the bigger challenge is coming, and that's what is probably leading to such a sharp free fall in the market. So that leads us to the second question. Is the fall over? Can it continue to fall? Well, it's $1 million question, as they say, but unfortunately, I don't have an answer to that. I'm not sure if anybody has an answer to that. But still, if I were to take a reasonably estimated view, I don't think the fall looks to be over as of now. The way the sentiment is getting V-shaped, the way the sentiment is getting weak, the impact, the visible slowdown that is there, probably it will look like market can continue to fall for some more time. And then the next question comes is that if it can continue to fall, how much more, to what level? Well, again, very difficult questions to answer, while one would ideally like to have an answer to these questions. But as I said, unfortunately, there are no answers to these questions. The only thing at this point of time to me looks like is that the fall can continue for some more time. How much time, till what level, very difficult to say. So now that we know that, and or rather we have seen that market can continue to fall, what should be the investment strategy is the question that a lot of you are asking. So let me break that question into three subparts. One, the investment strategy for the part of the holdings that we are already having, part of the equity exposure, the shares that we are already having. What should be done? We all know that with the market having fallen 30%, almost all our portfolios, all our holdings have fallen either in line with the market or maybe lesser or maybe more. Well, to my view, as I said, while it is very difficult to take a call on the market, since it looks like market can continue to fall, those of you who are very high risk oriented, who don't mind taking some call, probably they can still liquidate the trading part of the portfolio, which could be 10-15%, or depending your risk profile, that much percentage part of your portfolio on which you are willing to take a risk. I guess you can still take that out and let the rest be there, because it will be very difficult to predict the bottom, to catch the bottom. So we should not get caught at the wrong end, should not find that we exited at the bottom of the market and from there market suddenly recovered. So that's why I am saying for the high risk amongst those, probably the trading part of the portfolio can be liquidated, I'm sorry, because we are saying that market can fall for some more. So that was one part. The second part is in terms of what is to be done for fresh exposure. Well, I think one can wait. So while I'm sure you all have been hearing from the market gurus that keep investing, but that's what we have been hearing since February 19th, when there was a recent peak of the market, and now it's almost a month and market has fallen 30%. So if we have continued to invest, we are still sitting on negative gains on those. So while that is indeed a no-brainer strategy that should be followed, but since in my view market doesn't seem to have bottomed out, probably we can wait instead of trying to catch a falling knife. We can wait for some more time, see where the semblance of steadiness comes in the market, and then start the part of the fresh exposure that we want to take. Third part, what should be done with the existing exposure? So one, of course, we have to continue to hold at this point of time, but within that a few things can be done. So one, gradually part of the mid and small cap exposure can be moved to the large cap. Why I am saying that is that whenever the recovery comes, large cap will be the ones who will recover first and who will recover faster. Mid and small cap will take time. So that's one part of the strategy. Two, uh, the exposure can be moved from the low beta or defensive stocks to the high beta sectors, high beta stocks, on which banking and financial services will come on the top, and which is where we can move some of the exposure, because just like it has been falling very sharply with the fall in the market, it will recover also very sharply with the recovery in the market. Third thing, in the continuous rise in the market, if we took exposure to some of the compromisable quality stocks or managements, whatever we say them, low quality, bad quality, it's time to move that exposure to the high quality. For the same reason that whenever the recovery comes, it will first come in the high quality, first come in the large cap name, first come in the liquid names. And if valuation was any concern in buying them, that, as we all know, we are sitting at a 30% corrected market, so valuation for good quality stocks has also come down. So that is something that can be done. And yet another point of strategy that can be done for the existing exposure is that we can move our exposure from globally impacted cyclical sectors to domestic oriented cyclical as well as non-cyclical sector. So for example, although the prices have fallen too much, possibly we can move part of our portfolio from metals, oils, airlines, such other stocks, which will continue, which will, one, which are cyclical, two, will be affected by the global movements, to domestic oriented sectors like cement, like consumption, like BFSI. So these are the part of the strategy that we should follow. Uh, these are some of the questions I thought I will try to answer. We will keep interacting more. Stock ideas I have been continuing to give depending on your liking. I have given some of the large cap ideas like ICICI Lombard, HDFC, Bajaj Finance, and HDFC Life in BFSI, then Reliance, Titan, Dabur, TCS, Avenue Supermart in the non BFSI. We will continue to interact in terms of more ideas, but I thought this was what you had been asking a lot of people in terms of strategy, so let me try to answer that. Thank you very much.